All right. Well, welcome back to the iWealth podcast. And me and Brad are talking about gold and the ongoing value that goes along with it and how it hasn't changed maybe over the ages.
Yeah.
And so I heard the story about a guy that, would work for a day or a week and gets a certain amount of gold. And that same amount of gold, regardless of when you look at it throughout history, buys you, 2 hot meals and a pair of pants, right? It always kind of has the same amount of value to it. So should I be buying gold because it always has the same amount of value?
Well, I wonder, those pants years ago were deerskin or something, and now they're jeans,
now they're
right?
Levi Strauss.
I don't know about that, but I think this brings up a good topic, Matt. Like, I'll have clients that'll ask, hey, should I invest in real estate?
Yep.
Gold? Stock market? Like, where should I put my money
mattress?
Long term? And I have a mattress. I have a lot of clients. No, not in a mattress. I have a lot of clients that have various assets, right? It's okay to be diversified. It's okay. I own some real estate. I own most of my money in the markets.
Yep.
It's okay to, I don't own any gold. But it's okay to have some gold if that's what you want, right? From a diversification. Some people would throw in crypto as another diversification. So it's okay to be diversified. But let's just talk about historical rates. This is where I take clients. Like, what's better, Brad? Should I buy farmland? What's better? And so when you look at real estate, this is from 1990 to 2024. It's averaged 4 to 8% when you look at like your home's gain, okay?
Yep.
Over that time period. It went up 308% from 1990 to 2024. The S&P 500 went up 1,325% over that same time period.
Wow.
The S&P has averaged 10% historically forever. Yep. Some worse, some better, 10%. That's your historical number.
Okay.
Real estate from 1990 is 4 to 8, but then gold. This is interesting. So gold's performance varies, but from 1990 to 2020, so 30-year period, gold increased 360%. Why? When you take all the stocks, not the S&P, take all the stocks, gained over 900%.
Okay.
So 3 times more stock market performance than gold.
Yep.
And then when you take a look at real estate, much better performance, probably 4 to 5% more than real estate over that same time period.
Yep.
And so when you look at stocks, real estate, or gold can be a hedge. Real estate can be a hedge because it's there and you can drive on it. But stocks have won long term.
Interesting.
Yeah.
So what it boils down to is stocks.
The markets win. The markets win.
The markets win.
And I'll have people that argue and say, well, Brad, but it's kind of fun to drive on my farmland.
Yeah.
And I have some land I hunt on and stuff like that too. I don't
Is it worth $1 million to drive on your land?
But if you had $1 million to invest, would you go buy $1 million in a home?
Yep.
$1 million in a farm, $1 million in gold, or $1 million in the market? And long term, it's better off in the market than those other things. But if you had $10 million, what's wrong with having $8 million in the market and $2 million somewhere stuck in gold and real estate, right? It's
absolutely nothing.
So so it's all part of the perspective. But I think it's interesting to think through those because there's time periods where the commercials are all running gold. Like this time when the markets are volatile, like you should just be in gold. The market's bad. But long term, it's good to have perspective.
I think my takeaway to this is I will get the money out of my mattress. We'll see you back here next time.
Thanks, Matt.